You thought it was a pullback. Price hit your zone. You entered confidently. And boom, it kept dropping. What happened? Why does this keep happening to so many traders? The truth? Most traders don't know how to trade pullbacks. They are guessing. No system, no criteria, no discipline. In this video, I'm giving you the exact framework I use to catch clean pullbacks with sniper level confidence. You learn how to avoid fake outs, trade only high quality zones, and stop getting wrecked by what looked like a pullback. Hi there, if you're new to this channel, I'm Pullbacks Pro, a trader, and I've been at this game for over 3.5 years. I'm sure you've heard this before, that the trend is your friend. So it's easier to trade the market when it is trending. If it's ranging, it's a bit dicey, and that's where a lot of traders go to lose a lot of money. Some traders, even if they are not professional traders, they tend to make more money when the market is trending. But when it is ranging, they give out all their profits back to the market. With that being said, how do you trade a trending market? The answer is pullbacks. You only trade a trending market when the price has come back to certain zones, which gives traders the opportunity to jump in the trend. You don't jump in a trend when the trend breaks out. You jump in a trend whenever there are pullbacks. And I'll be showing you how to do that in this video. If you're new to the channel, subscribe. Now, let's get into a video and break it down. A pullback is not a reversal. It's a temporary pause in a trend, a breath just before the next move. But here's the mistake. Traders see price pulling back and either enter too early or assume that the trend is over. That's emotional trading. A real trader sees context and not just candles. So here's the golden rule. A pullback must be inside a clear dominant trend. If the market is choppy, sideways, or ranging, you don't trade pullbacks. You wait. Let me show you how to trade pullbacks correctly, step by step. This works on any time frame. What matters is precision. Step 1. Define the trend. You only trade pullbacks in trending markets. Use market structure. If it's a market that is making higher highs and higher lows, means it's an uptrend. And inversely, a market that is making lower lows and lower highs, it's a bearish trend or a downtrend. Step 2. Mark the pullback zone. This is where the money is made. I don't just trade when price looks right. I want a confluence zone, meaning many things must align, many things must happen. Firstly is the Fibonacci. I wait for the Fibonacci to draw back to a certain zone, which is usually the 50% zone. Some people use the 38%, some people use the 61.8%. It doesn't really matter, but the most significant I've used over time is the 50% zone. Next is previous structure. The market could draw back to a previous resistance or a previous support. Next are dynamic levels like the use of a trend line touch or a 20 EMA zone. The more things align, the better the zone. Step 3. Wait for confirmation. Now here is where 90% of traders blow it. They enter as soon as price touches the zone. Wrong. Touch equals to no trade. Instead, wait for a bullish engulfing or rejection candle, a break of counter trend line, volume spike, or momentum shift. I call it reactive entry. I'm reacting to proof, not guessing. Now you enter with confidence and discipline. Place your stop loss below the pullback low if you're buying, or above the high if you're selling. Not too tight, give it some space, give it breathing room. Your take profit, aim for the last swing high, or use a 2-hour or 3-hour plan. No pullback is worth it without clear risk management plan. You're not here to be right. You're here to stay in the game. Now, let's go to a live chart to show you how to actually trade these pullbacks. This is a clear case of how to trade pullbacks. Now, this is GBP USD. In order to trade pullbacks in this context, you need to know, first of all, the trend. Now, what's the trend in this case? I'll just simply draw out my trend line and mark the trend. Now, this trend shows that we are going southward. So this is a bearish trend. So I'll just put it this way. Now, how is this a bearish trend? Initially, this trend was going to the upside, like you can see right about here. We're having an uptrend with the market making higher highs and higher lows. Now, these are the higher highs and these are the higher lows. So just what's known as structure. So this was a higher high, this was a higher low, higher than this low. So this was a higher low. So this is another higher high. This was potentially a higher low. And then this came here to make an equal high. Now, how do you know that this trend is about reversing? When the characteristics of a trend are becoming violated, such as the market making high highs and high lows, becomes stunted, and then price now begins to make, equal highs and then reverses the trend entirely. So in this case, we made an equal high right about here, and then we now started ranging right about here. We're not really making any higher highs anymore, but eventually we now got to make a lower low. Now this lower low was previous to the lower to this previous one. So exactly the trend has changed here because there has been a change in the character of the market, and also there has been a change in structure. There has been a break in structure. So lower high, lower low. So that's why I can confidently say that this trend now is now in a downtrend. So we've marked the trend and we've known what it is. Next thing is to mark your zones. These zones I told you are important, is what makes you money. These are where the market or price will come back or pull back to, so that you can be able to take trades. Now in this case, the first pullback I'm going to mark, because of when this current trend, the first pullback I'm going to mark is this. For the sake of pullbacks, I'm just going to use my rectangular tool and then clone it as we go. So this is a pullback area. Now this is a pullback area. I'll mark it that way because that's the last swing low the market has made. And I just take it to the other side. Let's mark up all the zones. So I'll just clone this. Clone it, look for other reactions the market has made in the past. So this is also another pullback zone. The market can potentially pull back to this area, and just extend it like so. Now I'm just going to clone it again and look for the next pullback zone, which is most likely here. So it's a pullback zone, and why I've chosen here is because just take this off. So why I've chosen here is because of this is a reaction 1, reaction 2, this entire area is a reaction 3, and then this is a reaction 4. So that stands as a pullback zone as well. And then extend it like so. So now we have marked our pullback zones. Next thing is to do is allow price to react on these zones. Now let's see, because I'm just going to fast forward to see how price reacts around these zones, and then identify those pullbacks and trade them. You've seen that price reacted nicely around those pullback areas. Now, how do you know these pullbacks? So initially, when price broke below this zone, you can see that the next thing he did was, after it broke below this zone, you see the next thing it did was to pull back to this yellow area, which is our resistance zone, and then reacted around there and continued. It did the same thing. It broke this zone, it pulled back to this zone and broke it like so. So how do you take advantage of these pullbacks? Because some traders see these pullbacks and think that they should hop in on the break. No, you don't hop in on the break of the pullbacks. You wait for it to go and react at those levels. So in this case, go and react at the resistance levels before you take a trade. Now, this is the daily time frame for the pound dollar. So I'm just going to go over to the 4-hour time frame, because that's where I usually take my entries, to show you how to actually trade these pullbacks. In the 4 hours, you can see price reacting about this zone the nice way. Now I told you how to actually enter these pullbacks. You wait for certain criteria to happen. So in this case, we've known that it's a downtrend. Then we have our zones clearly marked out on the daily time frame. Now in the 4-hour time frame is where I come to take my entries. Now, how do you take your entries on this? Simple. The most thing I look for in order to take entries on the 4-hour, actually there are two of them. The first one is a break of a counter trend line. So in this case, we'll draw a counter trend line like so. Because what happens is, during every pullback, the market is actually flagging. So in order to demonstrate what a flag looks like, is let's look at this now. This is a chart. In the case of the market being an uptrend, this market is an uptrend. Now, how do you know I'm an uptrend? Higher highs. So this is higher highs, higher low, higher high, higher low, higher high, and higher low. So in this case, this is what an uptrend looks like. So I just take this out. An uptrend is marked by higher highs and higher lows, higher highs and higher lows, and then you just connect your trend line like so to show that this is a bullish trend. In order to know that the market is actually pulling back, it creates a flag. It creates a flagging system. So these areas now, These entire areas. So this pullback now in the main chart will look like a flag. So a flag looks something like this. So this is what a flag looks like. So when the market pulls like so to the upside, in order to pull back to demand zone, the market doesn't just come down in a straight line. It actually flags. So this is what a flag looks like. It pulls back small, comes back, pulls back again, comes back like so, and pulls back again. So this is what they call the flag. So the market flags and gives you the opportunity, whilst it's flagging, to draw your counter trend line. Simple. So going back to the pound, to the trade, the market flagged. These are the reactions. So these reactions gave us this flag and gave us the opportunity to draw the counter trend line. Now the next thing we do is we wait for it to reach a supply area, so an area of supply. So in this case, the area of supply is a daily zone marked in yellow. Now the last thing I usually wait for is a Fibonacci play. Once the market hits a Fibonacci zone and reacts around there. So this is a Fibonacci zone. So this was the previous swing high the market made right about here. I bring it down to this zone. You can see clearly that the market also respected our 0.5 level, which is this golden area here, also known as the Fibonacci area. I told you guys that it's usually the Fibonacci area that I love taking my trades from, because it's a highly respectable and highly iconic area on the market, on the Fib zone. So when the market reacted around here, I was comfortable now entering this trade. Now when it did eventually break my counter trend line here, so when my counter trend line was broken right about here, I got into this trade. My stop loss came just above the previous swing high, and then first take profit level was the swing low, how I usually take my profits, and then aim to the next zone, which is here. So ideally, this is what the trade looks like. This is a 1:3 at most on this trade. I do that for the next pullback. So when this market did break, on the break like so, on this break like so, I don't trade, I don't enter more trades here. I told you we don't enter on the break, we wait for a pullback. So where is the pullback? Simply, the market had to pull back directly to this zone. You can see this particular one doesn't constitute a pullback because it didn't pull back directly to this zone, to the yellow zone. So I didn't enter this particular trade, and it didn't give me a good, that's not a good Fibonacci play. Even if I do draw, okay, if I draw this swing low to swing high, so that's actually a Fibonacci play, but I don't enter this type of trades because my first risk reward will be low, will be small. So I left it alone. I didn't trade this one. But when it did pull back exactly to this zone, like you can see here, when it did pull back to this zone, I was confident to enter the trade. So the first thing I did was, since it's pulled back, it has given me the opportunity to enter by creating a flag like so. And then after it's created this flag, give me a better risk reward, because once I enter this trade now, this is going to be a better risk reward, and my stop loss comes above the zone, take profit comes to the next zone, give me a 1:3, and I enter. You can see the market did exactly that. The same thing happened in this one as well. So this is the break, then this is the pullback. Now the pullback showed a series of reactions around this zone. So this is the first reaction, second reaction, third reaction, and then the structure was broken right about here. So this was the structure. So this structure was broken right about here. So when this trade gave me the opportunity to draw a trend line, a counter trend line like so, I did wait for structure to break before entering this trade. So when structure broke right about here, I got on the trade. So this is where I'm getting in this kind of trade. Stop loss comes above the previous high, take profit, you can see good, and then I aim for the next support area like so. And that's how you trade pullbacks. Let's talk about the trap that kill traders trading pullbacks. Entering in a choppy market, no confirmation, just guessing, stop loss too tight, which causes them to get wicked out, holding losers, hoping they will reverse. These are not strategy errors, they are discipline errors. Fix your behavior and your entries get sharper. So, you don't need 10 strategies. You need one pullback method you trust and the discipline to follow it without flinching. If you keep chasing every setup, you keep bleeding capital. But if you master this I've showed you, you start trading with clarity, not chaos. Trade the trend, wait for pullback, enter on proof, This is how real traders move. If this gave you clarity, hit like and drop a comment. Download my no doubt entry checklist in the description. It will walk you through this step by step. It's free. Subscribe for more content that cuts through the fluff and helps you become a better precision trader. See you in my next video.